John started out actually in stocks and options, but has been trading currencies for more than 12 years as well. He's developed a formula, and we're going to see a bit of this today, what he calls his Forex trading success. Every aspect of trading, I think more importantly, since he has chosen to stay independent as a trader and fund manager, which is important to know, he never goes to work for a firm. He understands the challenges and mindsets of you guys that are sitting in the seats right now. And I think I've had over 50 requests asking when the FX presentation was. And so he understands the challenges you guys go through. And you guys are sitting in front of screens all day to make money. He understands that. And I'll tell you what, there's a lot of people that try to educate that don't, okay? There's a lot of people that educate that don't do, and that is the exact opposite of John. And I think more importantly, he understands how crucial it is to develop an edge in these markets and stick to that trading edge. Discipline is something you hear me promote and hammer home and say in every single presentation, and that's definitely what John does. So, John, with any further ado, I tell you what, I can't tell you how many people were excited for the FX presentation today. I hope they're all still here. We got a lot of people in the room. FXCM, that was a great segue over to you guys. So, Forex Traders Daily, you take it away, dude. We're really excited.
Thanks, Kyle. Yeah, unfortunately, I probably do better than I teach. Dustin ropes me into this, but yeah, I did start. What I want to talk about today, essentially in the currency side, is what moves the market in currency. Just to check, is my screen good, Kyle?
Yeah, you look great, buddy. You sound good.
Okay.
And the screen looks
right.
great. Everybody throw a Y into the.
Good to go, because there was I had an issue a little earlier, so I want to make sure it's clear before we get going. So, all right, well, so we're good. Okay, let's go through, especially since we deal in leverage markets, we have to do these disclaimers because we're in what's considered by most the riskiest markets there are to trade, not by me, but by most. So we do the disclaimers, past performance, inherent limitations to this market. Any market that's geared, you should be seeing this stuff because you need to know what kind of market you're in on this. We'll go over, here's a guideline of kind of what we're going to talk about today. An overview. I'm going to do an introduction, tell you a little more about myself. I don't know if it's possible in here, we looked at another, I would like to gauge a poll of you guys, but if we can, we can. If we can't, it's no worries. We'll talk about flow levels, which is what I've used to trade for the past 7 years and have found the most consistent success with. I'm going to talk a little bit about that, the application of it, and then I want to scoot through this because in anything I do, Q&A is typically the biggest because there's so much information now. That's a lot of it is a bunch of whatever, but there's a lot of information on Forex now because it's been one of the spaces that's been marketed heavily over the past 4 years. But I traded with the first retail broker, okay, that was available in the space. So I've been here the whole time. So I want to give you a chance to kind of ask any question any new to the space. So about me, I grew up in a small town. Nothing really good or bad about that, but sometimes it limits your exposure. So I was a lower middle class. I'm not from old money like a lot of fund managers. At this point, I am a fund manager. I do still trade independently, but I'm not I don't come from old money. I come from no money, really. And so my first job, we never went without, but I went without some things. I never went without food or shelter. So I'm thankful. I've got I wouldn't trade my life. So, but I did want more. And so my first job at 13, started lawn care company. Then I worked at Walmart. Then I did all that. And what I found out was I was a terrible employee. I really was just not cut out to work for somebody, and I saw that at an early age, and so I began to look and try to see, well, how am I going to do this? I'm going to start a business, what I'm going to do. So my father, actually, I think I was 18, had bought his first index fund kind of share, and so it was the OEX, and he told me about it, and he was watching the ticker or whatever. And I was like, what is that? I was asking questions, and then so it goes up and down each day because this was my first exposure to what the heck a stock was or a fund or anything in that space. And he said, yeah. So I'm thinking, so well, if I can get on the right side of that, then I can make money if it goes up. Or so that was my introduction. So a year later, I took some funds, small funds, and took my first trade. And so I started in equities, started in stocks. I've done some options, and for about 12 years now, I moved to currency. I'll talk about a little bit why I like currency as a trader. I've traded a lot of different instruments, why I stick with currency. And so before I shifted to flows, I was typically a technical trader, price action trader, looking for trends, trying to use, your lagging indicators such as MACD and RSI and divergence and convergence and all that stuff, and basically price action. And in currency, it allows the ability to really gauge price action the best. Like I said, for over 7 years now, and flows. Let me tell you a little bit about flows and why it came about. When I began to trade and I got successful, my first year in currency, I took $10,000 to over about 600 grand in about 8 months. Now, there was no that was not because I was a genius. Let's be honest. It was I got lucky, and I used a lot of leverage. I was trading. I mean, to think about what I was doing now as a real educated trader, I was taking trades back then. It was a little different, but I was taking trades around NFP at 100 lots, and and I wasn't trading with enough money to consider 100 lot a smart trade at that point. I was I was really gearing, but what it did show me was the power to earn in currency was way more than it was in stocks for me, because the margins were less. I didn't have to look for stocks, and I didn't have to. I could make a lot more money with less money, and that's what I'll talk a little more about that. But and Kyle, we might skip this part because on the other one, I could poll, and I don't know go-to meeting honestly enough to be able to poll people. But so if you're quick at that, we could do a poll. But it's always better for me to know the audience. So I'm really just interested in what instruments they primarily trade. So if you just put like Forex, stocks, options, and then
yeah, how about this? Everybody pipe into the chat real quick, and that'll fix it. Forex, options, stocks, ETFs, futures, bonds, whatever you trade, put it in here.
It'll give me a gauge, so I don't. So the majority of guys, and they might be, wanting to get into currency. I'll tell you about my transition.
I'll tell you what, John, we got a ton of Forex in here, and we got a lot of guys that are saying, I trade stocks but want to get into Forex. Got a couple futures, a couple options, but I'd say 80% right now is Forex and currency. Okay,
well that's good. Well, good. So hopefully it'll all be relevant. You don't have to be bored. But for me, when I shifted, I'll talk a little bit about it. But the reason I really like currency, the reason I shifted from stocks to currency. Basically, at the time, I was trading stocks. I was actually going to college, and so college was getting in the way of my trading because there was an exchange and so I could never get classes I needed. It would always mess up with the exchange open and those times. So when currency came on the retail side, I mean, it opened up for me. I mean, I didn't have $1 million to trade, which before the retail side of currency, you would need that. It was 24/5, so it was more flexible for my schedule. The pattern of behavior in stocks, I mean, you have to find the stocks to trade, and there's a lot of filters, a lot of software now, but back then it wasn't as developed, and so I'm sitting there trying, and there's some traders who pick stocks and they trade that as day traders. I find myself more of a swing trader, an intraday trader. I've done it all in currency and just developed into more of a swing position trader. I manage a portfolio, so It's a little different than sitting in front of the screen trying to earn a day's wages or whatever you're looking to get. But I've been there too. I've traded for that. I've done managed funds and done at pretty much every level. So the pattern behavior, I saw that behavior of currency. It's a real trade relationship that goes on. International trade happens. The guys who control most of it, it's got to do, there's central banks involved. They don't want an erratic market. I mean, there's a ton of liquidity. And I learned this firsthand, the value of this. And in other markets, some of you guys that may have too, but when I was trading stocks, okay, and this was a lesson, one of my first lessons in stocks, I carried a position with a stop loss. And I came to the market the next day, and the pre-opening bid that I was seeing was $10 less than the stop I had in place, and I got gapped because of some news overnight, and I was like, okay, unless if I'm going to carry a position, there's no way for me to offset that unless I use options, and it's a lot more complex. And so in currency, for me during the week, it made a lot more sense. I didn't have to worry about exchange opens, exchange closes, anything like that. There's no central exchange, so there's no, the exchange is going to shut down, so you can't enter orders. I mean, that risk, because it's an interbank market and there's no central exchange, liquidity pretty much is always going to be there. And why liquidity matters, you guys should know that as traders. An example even outside of trading is the housing bubble that we went. I mean, we're seeing it now in stocks, to be honest with you. Liquidity is what has driven the asset prices of stocks higher because of the cheap money of the Fed. Same thing happened with housing. It was cheap money, and they were actually lending it back then to everybody. So that liquidity that came is what began to rise prices. And eventually, liquidity got pulled. And now today, even on the lending side, I mean, liquidity is not in the market that it was. But the big boys, right, the guys that are able to tap the Fed window and all the funds who are able to get cheap money are using that liquidity, and stock prices are going higher. And so that's, for me as a trader, after that experience with the gap in the stocks, I wanted the ability to get in and get out when I wanted to. I wanted to know that my stock could be protected. And you can't really guarantee a stock being protected even now. Used to, some brokers, when it first started, they would actually guarantee a fill. But on the retail side, they can't do that anymore because of volatility. But you can offset positions in currency a lot better than you can in securities. I can offset there's pairs that are correlated, so I can offset positions. And so I just find it much easier to make money. And this is kind of what I really want to dive into, because as a trader, I never understood why price actually moved. I get the liquidity fine, but for me, I was like, well, why in the heck do I see this chart? Why is pricing going? What really boosts price up or down? I was thinking it was a MACD crossover and all kind of other stuff. News, fundamentals, tech analysis. Is that what's really moving the market? Well, as I grew in managing funds, I grew in my relationships as well, and so I began to see kind of, okay, what really moves the market, and it's money. The markets exist pretty much just to fill orders. So understanding that a stop is really not a stop, it's just it's an order. It's either a buy or a sell order. And so understanding that the market is just seeking out orders, that's what makes it move. Now, fundamentals, tech analysis, news, all that stuff can help determine where those orders will be placed. But the market is just still going after orders. The market could care less anything that happens. It's just taking orders. And so if you know the guys who have the largest orders, then you can create an edge. And that's fortunately been my experience. Is we got relationships that help me to pull data and create flow levels, is what I call them on a daily basis, where orders attract the market to, and then once they're filled, there's not going to be enough kind of momentum to continue. Most of the times that's going to be where it pauses and potentially reverses. There's 6 major funds really on the currency side, and this is not a on the interbank that they work as a channel a lot of times. They clear major orders, central banks. Some of the Deutsche Bank is probably the biggest bank in currency from a volume side. And this is, obviously we're not talking about, there's been some great retail brokers that come, and most traders wouldn't be in currency if it wasn't for retail brokers, because they have taken the market and chopped it down to a level where you can get in with a $2,000 account. Before, I mean, you couldn't even, get anywhere. It really was, I think, $1 million to be able to trade before they kind of chopped up the thing. And we'll never, like interbank, it really is, I mean, there's a razor sharp spreads at times, and most people never see that because the amount of volume that you're talking, the amount of trade size. I mean, there's some guys that 20 pips is meaning $100 million to, and it's just, it's at a level that takes a while to fathom that much money. But you got to remember, it's a global marketplace. It's where the central place globally where the business has to be transacted at any level, whether it's forwards or outrights. That's essentially what moves the market, and we're going to look at some charts which will help kind of see that. Traders fail. If you've traded, you probably figured this out yourself. Trading is one of the few things I know where it provides more self-discovery than any other occupation I know. You find out what makes you tick. Like for me, and that's why we always try to take a successful, like somebody's successful trading plan and apply it to an individual, and it just doesn't, it won't work that way in trading. Like you have to figure out what kind of individual they are, whether they're conservative, whether they're okay with the risk, whether they're, what their personality is, and then find a trading system that fits them. Otherwise, they really won't be able to handle the pressure that comes with real money trading. And most traders, they're absolutely bombarded with information these days, especially in Forex. I'm like, if I would have started now, I don't know. I really honestly don't, because there is so much stuff. I'm like, how do you even think about, for me, it was swinging a baseball bat, and there was no books, there was no anything. I had no mentor. I was just flat out taking trades and trying to learn. So I was just swinging a bat. And eventually, if you swing a bat enough times with the same pitcher, you're going to learn how to hit him. And that's all it was for me, to be honest with you. I lost money. I learned. I made money. I learned. I lost money. I learned. And that's really what developed for me. It wasn't some, I wish I'd had a mentor that was successful, but nowadays, because of the internet, it's a great tool, and there's great information, great access to people and things like Marketfy is doing. But on the flip side, there's a ton of crap out there that traders just go from thing to thing to thing and never dial in who they are and what really fits with them. And this is the big one. This is the big one, is no disciplined risk management system, especially in currency, especially in leverage markets that I see people. I've seen traders through the years. They just, hope rises up in any trader. Fear takes over, greed takes over. All that stuff is about discipline. It's about emotion stuff. And so if you don't have a predetermined plan and predetermine your risk, and you've spent enough time with it where you've proven the plan out, you're not putting everything behind you to really succeed as a trader, and having the right information and not too much of it. It's a challenge. Let's dive into flow levels, and really this is what they are. To me, they're a leading indicator of support and resistance. I put that in terms to try to understand. Most traders understand support and resistance, so I don't have to go into actually the orders and how the market orders are a magnet for the market, because the market's just moving to fill orders. So when there's a large collection of orders, or there's large orders, the market's going to move that way. It's basically, we created, when Dustin with Forex Traders Daily, when I met him originally, he knew I was a trader, and that's all I did. I did it for a living. He asked me to kind of do a trade room, trade call service, so we did it. And then here lately, he's like, I want to provide a tool. So we created a flow level indicator that allows me to share some of the data. And all it is data that creates those levels for you. There's nothing 100% about them, but they're definitely an edge. It's just a signal to buy and sell. What they do is they focus on entries. It's the highest probability zone based on order flow to protect a trade and profit from a trade. And it's when you look at these, and we're about to get in the charts right here. So the best time to trade in currency, especially off of levels, is during the highest times of liquidity, which are markets open, market closes, and things like that. Here's some old that they had done. One of our guys on the team had done a presentation, so I just kind of used his slide, but we'll go to a live, not a live chart, but this week. And so we have an indicator that draws every day. I input the data, okay? I input it daily. This isn't a system that goes off lags. I mean, it's a daily calculation that I do. So then we wait, we look for a move into that zone. And if you're carrying, if you're long, then you would be looking to maybe exit. A lot of times traders don't care. They're looking for an intraday entry. So we're looking to sell based on price action around there. It gives you a place to measure risk, measure the outcome. And this is not the greatest example on this flow. So let me pull in my just a demo here. See if I can share this chart, and we will. Okay, so here's how the indicator that I use to trade, we have built it so I can input data and it'll calculate every day, and these are daily. I trade off of zones. I don't have a level because of the way price action is, and when it fills orders, if there's a collection of orders, you have to remember in currency that central banks, and they want an orderly market. Sometimes they don't get it, but that's what they want 89% of the year. It's just an orderly market with range expansion that comes back, and it just moves in an orderly manner. And if you look larger, once a trend sets in, there's still those times where the market has to digest the orders, pull back, and fill the new orders the following day. But in currency, you guys, if you're trading any leverage, I mean, I used to focus on pips. Now I focus on yield just because it's a different focus with a fund. But if you're looking for, I've seen every system, right? 10 pips a day, whatever. But when I ran the room, we were doing probably 1,000 pips a month in calls, and I still had guys that just couldn't make money, and I never understood that. But I'll get into our solution for that in a minute. But this is actually right. The Fed Wednesday chickening out, so they're going to continue to provide as much liquidity as they can, and so our levels on these pairs. Let me see if hopefully these charts will. There we go. So these are previous days. So what happens is we have a current day, the bold lines. This is what we call the zone, a sell zone, and this is what we call a cap. We don't call it a stop because price action around here could sometimes, push through it 5 or 10 pips and pull back under it, and it takes a little while. I mean, we like to see it stay in the zone, but we gauge risk when I'm trading, I gauge risk off of this, especially on an intraday trade. And these levels are used primarily for most traders for intraday trading. I do a lot of swing position trading, but you know, the market's dynamic, and so it's constantly changing. Like, so it's impossible to feed that change of information to customers all the time. So I've created kind of a source to help guide and create a real probability edge. These are previous day levels, sell zone with a cap, and so every day, like a Monday, these levels will look like this, and then new levels will come out, and it's similar. It's what it looks like on every kind of pair. The previous day, current day, and they shift every day. So we leave the previous day as a reference point to gauge them, and typically they'll be buy and sell levels, but there will be days like Thursday and Friday. There's no, like, it wouldn't have reached a safe buy for me. The euro wouldn't, and the highest probability trade, regardless to any you know, article you read, was actually a sell in the euro after that event on the Fed. So the we've had we provide this indicator, and so people can have it on their charts. We do education with Forex Traders Daily. He's contracted me to do that, and we've done it for several years, and I just got kind of worn out with it because I'm just point blank a trader, and it's frustrating to deliver good information and have traders can't make money with it. And so we were talking about them, you know, with Dustin about what a solution might be for us, and you know, went through the same things that we've tried and we will do. But I said, you know, ideally, either you're an investor who wants to make money passively, or you're a trader who wants to learn how to trade, but you still need to make money while you trade. And so my, like, managed side for me is and the fund side is out of reach for most, minimum wise. So we looked at this. There was a big shift, I guess, at the beginning of the year, like the FXEM sponsor just showed their mirror trader, right? That's actually a, you know, Tradency's old platform, and so that's the technology. Well, we said, well, why don't we create our own solution like that for our own customers, where we can have a copier, and that's essentially what we've created. And it is a great tool. The difference with ours is we don't, like, we've created our own solution, we've programmed it, and I said, let's do it, let's test it, let's run it on some of our customers for 6 months. And so we did that in February. We built it out. We built our own page so that each trader can actually adjust their own risk accordingly. And so I'm piping trades through to an account that gets piped through, except we host our own, everything on our own servers. We protect everything. We have backstops, and we have a solid risk management plan. And so what it allows traders to do who are trying to learn to trade, or an investor who just wants to make money, it allows them to earn while that process is going on. And so this is what the test group, you'll notice the RM, you know what, I'm still on the old screen. Sorry guys, let me switch back. I think I stayed on the chart and I started going back through the PowerPoint. I can't keep up. I got 8 monitors, so I forgot to do this. So let me go back real quick. Because you're probably like, what? So anyway, I've already talked through all this. The solution side, I'm trying to book through this because the time, I do want a little time for Q&A. So I went through this and this, blah, blah, and I was talking about the copier, right, and what it is. And so we took a group, I think about 50 of our customers, and said, look, here's what we're going to do. Let's pilot this thing. I want to see how it works, because I'm a big, like, I've got some systems that I've been trying to automate, because I've always been a manual trader, and I'm automating a system off of the flows, but I've been working on it about 1.5 to 2 years, and there's no way I'm going to release it until I'm comfortable, and I'm almost there. I'm almost optimized it enough where I'm comfortable letting customers use it, but I'm just always been a manual guy. So the copier, basically, we took this group and we said, here's what we're going to build. We're going to house everything on our servers. All you do is decide what you want your risk to be, and you can continue to trade your own account if you want to trade it, and you're just going to get trades from us coming to your account, and that's it. And so that's what we did. And we have what we call a risk multiplier. So we got some that if it stays at 1, it matches what our master does, but you can multiply it or you can divide it. So if you want to be more aggressive or less aggressive, depending on how much money you have, and we'll get through that. Here's a couple examples for the 6 months that we just finished up. And this guy's obviously multiplied times 6, right? So he's going to have more gain, but he's taking more risk. On a copier, if you're not familiar, it's 100% control. But here's the big one with us, okay? You're not getting you're getting the exact trades, but you're not getting the exact size of the trade. Our master account has a max monthly drawdown of 5%. Okay, if we hit a 5% drawdown for the month, everything shuts down and we don't trade again for the next month. Now, I put the likelihood of us hitting a 5% drawdown maybe 1 out of 12 months. I mean, honestly, we haven't hit it in the, and I monitor things pretty closely. We had tried some different things. Some other traders on our team were putting trades in this kind of master account, and I did it as an evaluation. And now I'm really excited about this because we've developed something that I think that is just going to make traders money, first of all, but they can learn as well because they're going to see the trading, and if they follow flows, they're going to learn how to trade over time and swing the bat, but they're not going to lose money doing it. And they know the preset risk, and that's what it is. Now because of account size, I mean, you can divide it, but you can multiply it up to 12. Unbelievable. We had some customers ask that even in that initial group, and I was like, okay, but I mean, they're doing it on a $5,000 account. These guys have known me for years, so they know that we monitor the drawdown pretty heavily, and it's their risk. I mean, they're risking 60% on a monthly basis on their account, but these guys have done probably 400 or 500% of their money during that 6 months because they did multiply it. But it's their decision. I don't trade my fund with that kind of risk. And I can show you my best, the 10. After I traded, I moved into a managed fund. I started managing my family. I did the screenshots. I don't have to share them, but my best run on that, my first year with flows, is I took $1 million to $3 million in 3 months using flows. So then again, that's when my eyes get open and I'm like, okay, there's really something here. It's the same thing when I moved to currency and I got lucky from the 10,000 to 600 grand. When I really began to trade off of flows and I had that success, I was like, okay, there's a little bit of luck, probably maybe too much leverage sometimes, but there was a consistency in it. I mean, I wasn't really, at that point, I'm in profit. So yeah, the copier is just that, is as you learn to trade, you can have our trades in your account. You can trade with it. Or if you just want to have us trade for you for a while and you trade demo, it's exactly what it is. And we try to create a solution, because that was the frustration with me with Dustin. I'm like, I don't have time. I can do something monthly, but I don't have time on a daily trade room. I don't have time. I can help educate and help teach, and I can provide the flows. I said, but on a daily grind, I just don't have the time. I'm actually taking on institutional money, so it's just a different. But I've been there. I know the challenge, the struggle. I mean, I started with nothing, and so I know the journey of like wanting to give up because you're like, I'm never going to be able to really do this thing. And my advice is to stick with it. Like, just keep doing it. Keep swinging the bat, but don't don't risk excessively, because that's emotionally what destroys you. When you go through those swings, it just emotionally exhausts you. And currency guys are notorious for it because you've got access to huge leverage. They've lowered it in the U.S. now, but you can still get it overseas. But even 50 to 1 is crazy leverage. So, but yeah, for us, I've already gone through this time, experience, passive investment for the copier, and what they've done at Forex Traders Daily with this push, because we're now going into really after a kind of a 6-month beta test with our group. I think this is a good solution, because they're still going to teach, they're still going to offer flow data for traders that are trying, but this is an added tool to say, okay, well, I at least can be making and watching trades real time come into my account that I know are from those guys, so I can kind of see that or whatever. And so what they've done is, I think he said, just for this webinar, it's limited time, they're giving free access to the copier. So I guess they're going to, and that's their thing. They kind of contract me so for the trade. So they're going to pipe my trades, and they're going to offer the copier for free as they push this. So Kyle, that's about it. And I know it's kind of an introduction. It's my first time at Marketfy. I'll probably be back with maybe some educational content and stuff like that. But I do want to take some Q&A, and that's why I pushed to hurry, because I know you guys are behind a little bit.
Yeah, John, great, and I appreciate that. And everybody that is asking, I just put the link inside the chat. So everybody check the chat, and you'll be able to get that free offer from Forex Traders Daily from them today, okay? John, we definitely do have a lot of questions here, so I'm going to start ripping through them. Steve G asks, if you open an account, what is the minimum you need to open with?
On the copier?
Yeah.
On the copier, it really, well, they usually they charge. So if it's free, there's no minimum, because you don't have to offset any cost. But I'm not totally familiar with their side on but here's how it works. Like, if somebody opens $1,000 account, right, and let's say our master account is doing 4% a month. Most of our guys with smaller accounts are going to be gearing anyway, because a 5% risk on $1,000 is $50. So they're comfortable with that. So they want to be at like maybe an 8 multiplier, so they're making $300 or $400 a month off that $1,000. Except if they're doing that, they're risking $400 a month. Does that make sense? So it really comes down to your risk profile. But the only thing you ever have to worry about with a copier is if you have to offset a monthly cost. And right now, I guess they're not charging a monthly cost, so you really ain't got to worry about offsetting that.
John, what is your main time frames for entries?
Yeah, typically when they hit the flow levels, I have pending order set a lot of times, just because I know what's there. But most of the time, most of the entries are New York, and some off of London, but typically I'd say 80% of the entries are New York.
Do you pay attention, this is from Bob X, do you pay attention to volume in Forex trading, and is there a way to get volume data or something close to it?
What I'm looking at are relationships that I have, and these guys are big intermediaries for a lot of large orders. So that's the volume I'm looking at. Now, can you get access to it? No, until you build relationships and they're willing to share it. The good thing about currency is there's no insider trading, because there's not an exchange. So if you can get information of large orders, you can use it to your advantage. But as far as volume data that really makes a difference, I don't know of any on a retail level. I know that a lot of retail brokers probably aggregate volume now or something, but they're such a small piece of the overall currency pie that I wouldn't trust the data, honestly.
And this is always a great question for newbies in the Forex world. What are the best hours to trade Forex?
Yeah, I mean, that depends a lot on where you live. But like I said, the most liquid times in the market are typically market opens and market closes. That's when orders are being placed. That's when markets moving to fill those orders because it's the most liquid. For me, when I moved to currency, I was like it was a good thing I was single, to be honest with you, because I was asleep with my laptop and I'd trade as much as I could. Um, and but you definitely like on that, the most movement really occurs from, let's say right now, 2:30 Eastern to, let's say, 5 Eastern is a good trade time. Um, New York is typically around 10 to noon is a good time to look for support and resistance trades. The market's moving typically into a top or a bottom around those times for the day.
You pretty much want liquidity, right? I mean, you want people in the market. So when the overlaps too, I mean, that's what he's pretty much saying. So a lot of guys are asking, what about when the markets overlap? Yeah. So um, when the European stocks are trading and the U.S. is trading, that's the kind of overlap you want. And then let's see what we got here. We have okay, DA, initials DA. Does price move in the direction of least liquidity?
Does price move in the direction of least liquidity? Yeah, price moves, I guess in a way, if I understand his question, price will move um, where the orders or the largest orders are being placed. So uh, the guys are pushing money towards to fill those orders. So if there's large orders, above a price, and they're stacked, price is going to fill those orders. And then if there's nothing above it, then the market will begin to fade, and they'll begin to do the other. And it's the big guys. I mean, they're doing buy and sells to themselves a lot because they're capturing other people's orders. But that's for another webinar. But yeah, I mean, in a sense it is, but there's a lot more explanation there.
What does flow level mean?
Yeah, flow level is just a term we came up with, but it's the levels I use to trade, and it's based off of real order flow data that I have access to, and I calculate to create these levels on a daily basis. So we just call it a flow level, but it's based off of order flow, which is orders that are being aggregated or placed around certain levels.
All right, just a couple more folks. We're going to be wrapping up with John here from Forex Traders Daily. And this comes from Sean. What about looking at currency futures contracts for volume information?
Yeah, currency futures, once again, is on an exchange. Futures are on exchange. So if you trade that exchange, the volume might be relevant. But I've never studied whether there's been any statistical proof that that's going to help on the interbank market, because the interbank market is where most of the transaction. But if you're talking about like Chicago Merc, where you're just trading a futures contract, then the volume is specific to that exchange. So if you're trading on that exchange, then if you got volume data for the exchange, then it could probably help you. But I don't know about the overall. It may be a gauge. I've never done a study or looked at that.
And what about, have you ever traded options on top of Forex, or would you recommend that?
Options, currency options. I have. I guess the big push now is what, binary options. I see that all over the place. But yeah, I mean, I traded options and stocks. I traded options and currency, but I'm a big, like, when I traded option and currency, it's typically a long-term option. When I think that price is at a close to a yearly bottom or at a multi-year top, or it's in a multi-year range, I'll play longer-term options. I don't like the binary stuff where the next 24 hours or the next 4 hours. I don't do a lot of that.
All right, John, I'm going to get one more question in here, guys, and then we're going to move on to the next presentation. And it comes from Nadav, and he says, what are the indicators that you use to determine the trend?
Yeah, well, price, but trend. Trend is pretty irrelevant to my trading, to be honest with you, because trend is always determined on time frame. So if you're trading an hourly chart, the trend is going to look different than a daily chart or a weekly chart or a monthly chart. So we trade momentum in orders, to be honest with you, and there's a pattern in currency. And so I used to, before I really focused on flows and the back and forth behavior of orders, I would follow I would look at the trend. You can just look at a chart and kind of tell where price is moving, but that doesn't mean that it's going to help you get trades. And most traders I meet aren't long-term holders anyway in currency. On my options, like fundamentals will develop a trend in currency. So when I look at option plays and I look at positioning, the retailer's positioning, and you know, central bank policies and stuff like that, the economics of a country, and the overall range for years of a currency. I mean, central banks are trying to. So when I look at a yearly trend, or I'm trying to gauge the next for a long-term option play, I use those kind of things. I don't use any, you know, like technical indicators, not in currency.
All right, John, let's finish up with one more, and this comes from
Okay.
WN French. How long do you usually hold a single trade for?
As long as, I mean, I hold some trades until the next, like, target float, like big order target. So if it's a swing trade, and sometimes if it's a daily, weekly, but on average, our trades, the intraday trades, are going out when it takes a flow level. It's going to go out that day. If it's a position trade, like if I've got a sell zone and a buy zone, and it reaches a sell zone, I'll try to hold it to the buy zone until those orders are filled. But on average, 80%, probably, you know, less than 2 days, especially on this.
Cool, John. Well, hey, man, I really appreciate you taking time out on your Saturday. I know we actually brought you in last minute. I really appreciate you coming and, you know, teaching us about your strategy. And, you know, I've just heard so many great things, especially from Dustin, from you. So, brother, I really appreciate you coming out and taking the time today. And I hope you enjoy the rest of your weekend. Okay.
All right. Thanks, Kyle.
All right, folks. Again, I dropped that link for John Silver one more time from Forex Traders Daily inside the chat. So please do go and check that out. Okay. All right, well, cool. Before we move on to our very last presentation of the day, but definitely not the least, I wanted to one more time, you know, and actually John just mentioned the binaries again. We do have that free education course that was sponsored by our sponsor, Nadex, which is a binaries options exchange out of Chicago, and also FXCM, which is going to refund or reimburse you, I should say, up to $500 for anything that you buy on Marketfy. Not even just for this event, but for anything you buy. So you can head over to marketfy.com and check out any product, and if you buy it, up to $500. So you can buy an annual, and they'll refund or they'll reimburse you into your account for $500. All you have to do is fund the account for $2,000. Okay. All right, guys. I know that I'm getting antsy. I know that I am ready to get a stretch in. So let's take a 2-minute break. When we come back, we're going to be talking with Dave Menning, and you're not going to want to miss this. He is talking about short-term strategies that beat the market. And I'll tell you what, and he uses ETFs. And I'll tell you what, with the market conditions we're in right now, with the FOMC stuff and you know, the trends that we're seeing, this is really, really, really cool stuff to learn. And he has some strategies and methods on several different types of portfolios that he has, from hedging to just trying to mimic the indices to, you know, create that kind of yield. The strategies are awesome. I was actually with him in Chicago last weekend for an event where he did a in-person presentation, and I'll tell you what, this guy is one of the smartest money managers I've met, and one of the nicest guys I've met as well. So coming up is Dave Menning. Let's all go grab a drink. I'm sure that everybody needs to use the bathroom or just take a second to walk outside, even a smoke break. And we'll see you guys back here in about 2.5 minutes. And by the way, everybody, I'm still sitting here too. So if you got questions about Marketfy or about any of the products you've seen today or about any of the presentations, you will be getting a recording for each and every presentation. They're actually working on getting that together for you guys right now. My Marketfy team is hard at work. I had them here till about 2:45 a.m. Eastern time last night. We had a last-second glitch that we had to fix, and they're a fantastic team. So you guys have any questions for us about anything, we'd love to hear it. We also always give out our phone number, so I'm going to drop that in the chat right now. You're always welcome to call us, talk about trading, talk about whatever. You know, our vision here at the company was to provide a much better solution for you guys to learn how to trade and invest, to bring you experts that actually care, not someone that just runs a great portfolio. I've met a lot of guys like that that, you know, have quite frankly been, you know, I'll say less good things about them, but the guys that we bring here and partner with, or and gals, they not only are experts in their strategy and their methodology and their thesis, but they are also good people, and that's important because at the end of the day, you know, if your trade goes bad and you need help, they can go point you to a video, or they can sit there and help you. And we really pride ourselves on having people that actually care and actually want to help you. Okay, so please stick around. We got about a minute and a half here. I'm going to bring on Dave, but if you do have any questions for me or the platform, feel free to shoot them on by. I know I got a lot of familiar faces in here from past webinars that are just, you know, they have been fantastic. And I'll tell you what, it's days like today where we haven't slept in the last 34 hours or something like that, but I mean, it's all worth it, you know, being able to help you guys and help you find stuff that can truly help you trade. At the end of the day, if we make you money, I'll tell you what, that's what we set out to do a long time ago, to get rid of the scumbags in the industry. And everybody, do me a favor in the chat. Tell me if you just put a yes or no, or you know, you don't have to tell me who it was, but have you ever bought somebody that turned out to be a scam or a scumbag? Because I'd love to hear it. I'm actually going to start writing a blog on, you know, trying to call these guys out, because I've just met so many people that lost money not in the markets, but have spent money on just complete douchebags, and you know, we're sick of it. So that's why we do this stuff, and I stand behind everybody we put on the platform. So if there's anyone you ever take issue up with, you contact me directly, and I'd love to have a conversation about it. And it's happened in the past, and you know, there's people that, you know, we've vetted even further. So you tell us, we're here for you guys. At the end of the day, we want to make you guys money. So stick around. We got one more good guy left, and I promise you, he's definitely one of the good guys. So we'll talk to you guys soon.